Canola School on RealAgriculture.com is supported by Bear Crop Science. We're joined right now on RealAgriculture.com for another edition of the Canola School. We're joined by John Drager. He is with FarmLink Marketing Solutions based just in Winnipeg. Welcome today, John.
Thank you, Sean.
John, when we look at the canola market right now, I'm seeing some conflicting things. I'm on Bar Chart this morning, and they're telling me that the January-March future technically is a strong sell. Yet, I open up my email this morning, I'm getting reports that Oil World thinks that Canadian and Australian exports to different countries is going to greatly increase. What's going on here, and how should I really feel about this canola market?
Yeah, we're kind of getting two different messages in a way, Sean. Certainly, if you look at the futures, I mean, everybody knows we've been well off the highs. We're really testing support here a little bit today. We're a little softer today and kind of pushing at some support levels. Hopefully, support levels hold, and I kind of think that they will. But certainly, you know, if a person just looked at a chart from a technical perspective, if we push through these support levels, you know, that would be the kind of thing that might trigger some selling if a person just clean looked at the chart and didn't know necessarily what it is that they were looking at. On the flip side, if you look at what's going on in the cash market and you see basis levels that are really quite phenomenal in a lot of places. We're seeing plus 10, plus 15 in Manitoba, positive levels in Alberta, strength through good parts of Saskatchewan. I mean, it's not everywhere, but certainly in a lot of places we've been seeing strong basis levels, which fundamentally is a bullish signal. We've seen futures spreads stay relatively tight. You know, that also fundamentally is reflects tightness in the cash market. So there's kind of two different signals that maybe are getting sent in a sense if a person either looked at just futures or what was going on in the cash market. So it's kind of two different stories in a way.
So what should I be looking at? Should I be looking at the fundamentals or looking at the technicals? Or if I'm holding inventory, I think I like the fundamentals a little bit better.
Yeah, you know, I think one thing that from a producer's perspective, certainly someone who's been sitting on a basis contract and hasn't priced the futures, you know, it hasn't been great. Obviously, the futures have been sliding. For any canola that has not been committed, that's just sitting there in the bin and hasn't been priced. Are we off the highs? Sure, we're off the highs a little bit, but we've seen that improvement in basis levels really eat up to half or more of what we lost in the futures market. If a person can maybe sell into a deferred delivery window, pick up a little bit of a better basis and a little bit of carry in the futures, you're probably still selling at maybe 50 cents a bushel, maybe off of where the peak would have been in the futures market a few months back, or certainly not much less than that. So from a straight cash market perspective, the market has not lost nearly as much in most locations. Again, not all locations, but generally speaking, in a lot of areas in the prairies, cash market has lost a lot less than what would be suggested if you just straight looked at a futures chart.
Right. So I guess when we look at these prices, and if we have reasonably strong fundamentals for a strong market, is it? But we've got the charts telling us something else. Is it kind of like when we have a stock and the P ratio is way too high so that we don't have very good value here? Or like, how should we look at this? Because I think it's somewhat confusing for producers to kind of interpret, man, what is happening? Because if the fundamentals are that good, why aren't prices going higher?
No, I think that's it is a little bit confusing for producers in a sense, and you know, I guess sometimes we can have a tendency to overcomplicate these things a little bit. I think to a certain extent, if I was a producer and I didn't have very much sold, I was lightly sold in canola, I would probably view it from a cash price perspective and say, you know, these are still pretty good values. We're really not that far off the highs. If we look back where the highs were placed, I mean, that was still back in the growing season, and most producers are a little reluctant to sell too aggressively until they know it's safely in the bin. So realistically, beyond maybe that first increment that guys forward sell, probably wouldn't been able to sell cash prices a whole lot higher than we can get today. Again, if a person is in one of those areas where that basis level has been strong, and maybe we can look and deliver in February, March, or some of those windows where the basis levels have been firm. So I think if a person takes a step back and looks at it from a cash perspective, still pretty good values. Probably an opportunity to make sure that you're sold at a reasonably comfortable level, and then beyond that, that's going to vary from one farm to the next. if we sit there and look just at the canola S&D, it's very tight. Demand has been good early on in the year. We cannot keep up this pace of demand through the entire year, and somewhere along the line, we do have to slow this pace of demand. That, if you look at it in isolation, is favorable to prices. However, within that context, I mean, canola is not an island unto itself. I mean, it is going to be priced relative to other oil seeds and sort of in the context of the grain complex overall, and that's where some of that pressure is coming from. But that's kind of the story of why there's a dichotomy from the future signal, but the cash market is telling us something different. So
are you for you personally? Are you for canola right now? Are you a bull, a bear, or are you kind of sitting on the fence watching the cows?
Probably, I would suggest range bound. And again, we are testing support here, and I would not preclude that if we do break through some support, and again, these outside markets have added an extra level of uncertainty to everything, so we could potentially break down through some support here, and that certainly is a risk. But generally speaking, I probably see ourselves range bound. I think one of the things that we look at a certain point, how much higher are they going to push basis levels in some of these areas before some of these commercials? It might just make more sense to buy futures and stand on paper. So to a certain extent, there isn't a certain amount of underlying support that should help hold this board up. In the past, we've seen these markets break down. It has unlocked some new demand, and that's also been supportive. And so to a certain extent, I do think that there should be some underlying support on this futures market. But not just in canola, but some of these other markets, corn, soybeans, and some others, once they rally it to a certain point, it seems to stall out. And I suspect that perhaps would be the situation here for canola. So perhaps rebound. It looks like the highs are very likely behind us. I would be very surprised if we could rally up to some of the highs that we saw earlier on this summer. Again, I think that the fundamental story is such that we should be reasonably well supported underneath. I think from the futures, but if not from the futures, certainly what we've been seeing in the cash markets, and again, basis levels are a reflection of that. Commercial companies are concerned about getting their hands on seed. Plants are crushing. The export pace has been good, and that in and of itself is should be reasonably supportive to cash values overall.
Okay, John, thanks very much. As always, very good analysis, and we'll talk to you again soon.
Good. Thank you, Sean.